where we spoke about the last two areas of materiality and computers in auditing. I believe we should speak to this last session before we go to bed. Okay, so it's one area that is also seldomly tested. I would say seldomly tested, not too often, but then it's good you are conversant with the not-for-profit organizations audit, which we call generally the NGOs. We call them NGOs kind of audit, not-for-profit organizations audit. So by way of introduction, the NGOs are different from commercial organizations because the primary motive for commercial entities is profit maximizations, wealth creation, building for owners and shareholders. So commercial organizations actually are there they're in business for profit. But the not-for-profit organization's objective is service provision to society and specific groups. So it could be charities, NGOs, clubs, religious bodies, churches, mosques, government-owned entities, and the likes. And their focus, talking about the not-for-profit organizations, is mission-driven, not profit-driven, like commercial entities. They are mission-driven and not profit-driven. So coming down now to auditing work, the challenges in auditing not-for-profit organizations is that there are no profit motive. So the traditional financial performance indicators like return on equity, return on capital employed, profit margins, profit before, after, gross profit, operating profit are less relevant in auditing and not-for-profit organizations is one of the challenge. But you see, when you look at the commercial setting, those that are for profit, businesses, PLCs, listed entities, public interest entities, that profit is a kind of benchmark, a component to even measure if the organization is even doing well. When an organization is eroded with losses, it begins to challenge the going concern of the business from the auditing perspective. But the not-for-profit organizations don't have this as a challenge. So the challenge of auditing a less or no profit-based entity is one issue for auditors, and that's why we call it a challenge. So for these not-for-profit organizations, we have funding sources in forms of subscription. So for example, some clubs could have members, and what they do is they do yearly or monthly subscription to address the needs, operational and financial, of that organization. Donations, grants, government subventions, and sponsorships are general ways of raising money for not-for-profit organizations. And there's the risk of misapplication of funds, where funds are provided for a particular cause and they are channeled to another cause. Could be a risk. And some donors will say, okay, I donate money for cancer, not for general hospital needs or something. And where maybe patients don't have cancer, they channel it to, that is a risk, that generally an example of a risk that could pervade the NFPO's space. So areas of challenges could be resource constraints, the pressure to achieve objectives with limited funds. Most of the time, they may not have funds to reach out or to carry out most of their activities. So the pressure to achieve these objectives with those limited funds could be resource constraints and could be challenging for NFPOs. Also, another area of challenge is accountability. In demonstrating that resources were used efficiently, effectively, economically as intended is always a challenge with not-for-profit organizations. Then another area is internal controls. Weakness in internal controls, most of the time relying on volunteers and limiting segregation of duties to one person carrying out a whole chain of transactions are prevalent in NFPO settings. We have valuation issues where donated assets, volunteer time, or gifts in kind may be difficult to measure, especially when they are not monetary. So valuation issues permeate and pervade the NFPO space. So in generally auditing such organizations, the auditor's objective should be clear, is to express an opinion, as it is with commercial organizations, on whether the FS give a true and fair view or are prepared in line with the applicable framework. So they have their framework. The IFRSs have a specific template for NFPOs. And in assessing whether funds, the objectives, another objective of the auditor should be to assess whether funds have been properly accounted for as collected in form of subscriptions, donations, grants, subventions, and gifts should be properly accounted for. That should be the objective in auditing. And it should also be used in line with donor requests, the grant restrictions. Do this with my money. Sponsor orphans only with my money. Don't sponsor. So such requests, as stated by grants and donors, should be expressly abided by the users of that funds, the organizations, staff, and all that. An auditor should ensure that it's part of their objective to see to this, that in reviewing the operations of the organization, that the use of these funds in line with the donor and grantors requests are abided by, and also to apply and achieve stated objectives of that non-profit organization should be part of the auditor's objective. Generally, what are the objectives of the NGO, and are the activities, operations achieving those objectives based on the funds provided? This is very important. So the area of focus auditors should have on the financial statements of NFPOs is income generation, the donations, legacies, grants, subventions, and the risk of understatement and misappropriation of those funds. So these are areas of focus during auditing such space. Number 2, restricted funds. Ensure funds are used only for the specific projects or beneficiaries' request and intent. So restricted funds should be used for what their purpose is for. The auditor should focus on that. Number 3, expenditure. The auditor should confirm it is for legitimate purpose, because most NGOs you see, we had some allegations, especially in Southeast, that some NGOs were channels for terrorist financing and money laundering. So auditors should be careful to confirm that legitimacy of those NFPOs, they are authorized and supported by documentation. It's very key. It's very key. Number 4, the assets, treatment of donated goods and services, valuation, safeguarding of assets, and whatever is owned by the NGO, especially for non-current, which is the fixed assets, should be focused on by the auditor. Number 5, governance, where you have a big not-for-profit organizations that have maybe boards and maybe splitted into committee oversights. Depending on the size, they should be compliance with constitution, the laws, the trustee deeds, and every document that facilitates the MEMAT, Memorandum of Operations, Articles of Association of the organization. Generally, the governance framework should be focused on by the auditor. Then internal controls is a key focus. For small NGOs, they should be adapted and integrated to at least the factor of limited staff. For small NGOs, the internal controls should be at least okay. The auditor should see to it that it adapts. The internal control should adapt to small entities or small NFPOs with limited staff strength. Also, another area of focus is reporting considerations. The auditor may require special purpose reports from regulators, from donors, from trustees, in addition to the statutory audit reports that is required for such NFPOs. And the auditor may need to highlight going concern risks in areas of funding uncertainties that could scuttle operations and maybe shut down the NFPO. So in some cases, a review engagement rather than full audit may be acceptable. So audit-related service in terms of not strict statutory audit, but just reviews to ensure that operations are in line with stated objectives could be less expensive for such organizations and could be requested for. Very key. So, for example, if a charity with annual revenue of 10 million receives a 2 million government grant, and that grant is restricted for malaria campaigns only, and the organization goes to use that part of the money, that 10 million for, that 2 million for admin expense, the auditor must report non-compliance on that because it was stated that malaria campaign is what that 2 million should be used for. So the 10 million, the 8 million proceeds they can take from that, but that 2 million was stated for malaria campaign. So the auditor must ensure that these donor restrictions and doing as requested is very important, even if the overall balance in the accounts is not material or significant. Ensuring that most of these clauses requests are adhered to is part of the job of audit. So that's a general introduction to the NFPOs. Nobody has asked the question so far. I don't know if we are, it's because we are rushing, but please feel free to ask, because as we come to the question and answer session, maybe that's when we'll ask, but we'll see one or two questions around these NFPOs that may give you easy marks. So please ask where necessary. Is key. Ask where necessary. All right, so that's it for Unit 1. Let's look at the audit approach in addressing the not-for-profit organizations, the audit approach. What is the audit approach? Okay, yes, please, KU. All right, KU is prompted to ask. Please go ahead.
Good evening.
Yeah, evening, but you may need to take off your earpiece. I think it's making this noise. Maybe you use the handle directly.
Hello?
Yes, we can hear you. I can hear you. I
wanted to ask a question when we are treating CATs.
Okay, computer assisted techniques. Yes.
Exactly, yes.
Yes.
I was just a little bit surprised. I didn't hear you mention anything relating to AIs, why they are not deployed in auditing. Could it be because of professional judgment or something?
Okay. All right. Good question.
Can you hear me, sir?
Yes, I can hear you. I heard you loud and clear. You asked why during computer-assisted techniques, why AIs were not mentioned, why I didn't mention it, even as, though it was not on the slide, it's not on the case study question, but auditors use AI these days. So I got your question. I believe that's what you asked for.
Exactly, that is it, sir.
Okay, fantastic question. So, like we said, computer-assisted audit techniques are tools and techniques auditors use to test data directly from clients' IT systems. So, we give example of audit software, test data, parallel simulations, embedded audit techniques or models. So, why deploy these? We said is to handle large volumes of transactions efficiently. That's the first reason. 2 is to test the accuracy, completeness, and reliability of data. And also 3, to detect anomalies, fraud, and unusual patterns. And 4, we said to assist audit coverage and reduce manual checking for accuracy and effectiveness purpose. So when you look at AI in auditing, the use of AI like machine learning, data analytics, robotic process automation, which we'll be looking at to support audit processes, is very good. And why I expound AI from CAT is that when we come to information technology in auditing, you definitely see AI there. So they are interrelated with computer-assisted audit techniques because you need to deploy them to analyze big data and identify hidden risks or irregularities. So AI and computer-assisted techniques work hand in hand. It's just that maybe at the level of planning, they didn't put AI there, but we'll come to it, I think, in chapter 14 and 16. They are very important. In fact, I use them very, very critically for my work. ChatGPT, Gemini, DeepSeek, any AI you think, are very important for audit because they help you perform predictive analytics, they forecast fraud risks, the big data helps you to identify, and also to automate some of these repetitive tasks. You have like 2,000 invoices. AI can just take them for you in sampling, in reconciling, in picking out duplicates, and also helps in doing one or two confirmations. So to enhance your audit quality and efficiency while freeing the auditors to do judgmental work, it's very good to employ AIs. We'll come to that. It's good you asked at this stage. So computer-assisted techniques are actually traditional IT audit tools for testing transactions and controls. But AI is the modern intelligent extension that helps auditors handle complexity, speed, and predictive insight. In fact, I must confess, I can't work now without AI, because CATs and AI helps us to improve audit efficiency, reliability, and fraud detection. And in the words of the Microsoft CEO, in one of the interviews I watched him say, AI has come to make us do much with less. So in answering your questions pragmatically, yes, AI is very important and they help auditing big time. We'll come and overblow that when we get to, I think, chapter 14 or 15, chapter 14 and 16. So thank you for bringing that at this stage. It's a good question. Fantastic question. I hope I was able to. Yeah. All right. Good one. Okay. So back to our discourse on the audit approach. We said, although the overall audit framework is the same as commercial entities in auditing, the approach could be business risk approach and all that, but the details differ due to the nature of not-for-profit organizations. And the nature of not-for-profit organizations transactions has to be with donations, not revenues that are earned. So you have the grants, volunteer involvement that may not be able to be quantified in terms of monetary assessment of value. And you have areas of weak controls, restricted funds, and the likes. So in carrying out the audit of not-for-profit organizations, we need to plan. It's the same thing with commercial organizations. So auditors must plan by considering objectives, the scope, the timing of the audit work is the same. Secondly, you need to look at local regulations governing the not-for-profit organization, the compliance framework. What are the internal and the external regulations? Very importantly, the external regulations around NFPOs. The auditor needs to work with that. The nature of the environment and activities of such NFPOs must be considered by the auditor. Then the form and content of the financial statements and the audit opinion, which is the output, should also be considered in planning. Then key audit areas and risks, just like the risk-based auditing we talk about, focusing on high values, high risk areas, should also be considered by the auditor in planning. Then number 2 is risk assessment. The same thing with commercial organizations. There are inherent risks, control risk, detection risk. So that model should be employed as usual for NFPOs. So we spoke about inherent risk, saying that where high values like cash donations, grants, and volunteer collections are involved, there are inherent risk of fraud, misappropriations, and all that. So that must be taken into cognizance. And number 2 is control risk. We're talking about high override of controls, weak systems, one person doing what 5 people is supposed to do, and all that, especially for smaller NFPOs. So the control risk is there. Then the detection risk is that the auditor can control this by designing procedures to reduce the inherent and the control risk. So substantive testing may be needed for maybe larger NGOs, but the statement of financial position approach may be employed for smaller NGOs. So generally, number 3, the internal controls is the same with commercial organizations. So key focus areas, especially for small NFPOs, is segregation of duties, which is a problem and is often difficult for small NFPOs. Then the issue of authorization, approvals of expenditure is also an issue. So auditors should take note of this key component, segregation of duties, which generally talks about the control environment. Authorization, approval of expenditure is very important. Cash controls, where significant cash is collected and disbursed, the controls around this should be taken note of by the auditor. Then controls over income sources, talking about the donations, the fees, subscriptions, grants, should be taken note of. And also ensuring funds are used restricted based on the users or the donors' requests, especially for restricted funds, should also be taken note of. These are key areas. And also number 4, in auditing the NFPO space, audit evidence is very necessary, just like it is in auditing commercial institutions. Substantive approach often required for controls that are weak, maybe for medium-sized or big NFPOs. So audit evidence must be gathered. Sufficient, appropriate evidence is necessary in doing the work. So the auditor needs to focus on the completeness of transactions from start, initiator to close out. It needs to focus on completeness of transactions, the assets and liabilities, recognition and disclosures. And also, it needs to also look at misuse and misapplication of funds, also in his focus. Also, analytical procedures are useful, but may be limited if the income or expenditures are irregular, unpredictable, and depending on the size of the NFPO. Analytical procedure will now depend on the auditor's judgment. And finally, reporting. If by way of the NFPO's internal policy, they need to have statutory yearly audits, because some big NGOs do that. They tell you statutory yearly auditors should come and check the books to ensure that the organization is doing in line with the objectives. Then if it's statutory required, the use of ISA 700's format, like it is for commercial entities, is necessary, looking at the title, the addressee, the opinion, the basis, the key audit matters, that is enshrined in a typical reporting format. The going concern responsibility, signature and date should be employed for reporting also the NFPOs. So if it's the auditor, if the reporting is not statutory and is voluntary, then it can be adapted to objectives, but it's still good to follow the practice, the structure of ISA 700 in reporting. So depending on whether it's mandatory or voluntary, the auditor should follow that standard ISA 700 structure, talking about the format that includes title, addressee, opinion, basis. So voluntary now could be maybe not yearly, maybe twice a year, biannually. It depends on whatever request the management of the NGO asks for the audit. So where is voluntary, this format is also recommended. Then other considerations speaks to cash, often significant. Significance of cash speaks about the nature of transactions. There are some transactions that are automated by some NFPOs, and some are heavily cash driven. The auditor needs to consider that and ensure that the controls around these are very, very robust. Then talking about income recognition, which is a high risk area for NGOs, talking about donations and informal fundraising systems should be focused on. Then the scope limitations may arise based on evidence which is hard to obtain for not-for-profit organizations. But then the auditor's judgment and his way to navigate such areas should bring to bear. And some particular audit firms are experienced in this. So most NGOs would like to use such audit firms. And the restricted funds must be verified, and their use and their objectives in ensuring that what they were intended for was actually provided for. And also, you must take note of stakeholder sensitive parameters like key ratios, statistics. For example, revenue spent on admin versus project. If you use QuickBooks before, I love using QuickBooks. I have it installed on my system. If I use it for some of my clients, there is a package in reporting specifically for NGOs. There's an NGO format. Aside the IFRS format on QuickBooks, you see the NGO format that has NGO or NFPO's ratios, statistics, comparative analysis of admin and project spends, help report around the stakeholder sensitive key data And with such format of reports, I don't know whether it's in other ERPs or computer packages, accounting packages, that really helps gravitate to show the kind of reporting format that is suitable for NFPOs. So QuickBook is good. The Intuit Accountant's version, if you have it, please use it, and it will help you look at how the NGO reporting format is. The tip for exam around questions on NFPO audits, you should always highlight the cash and income recognition risks. Some questions will come around that. Then the restricted fund compliance. When a fund is provided for a particular purpose, auditors should ensure it was used for that purpose and not diverted for another. Also, weak internal controls. They are the general occurrence around NFPOs. So when questions come or case studies, take note of this. Then the substantive testing focus should also be part of your answers for NFPO audits. Substantive testing, and where it's a large entity or a small entity, then the SFP approach should be employed. So that's it generally about the not-for-profit organizations audit approach. All right, so any question? Any questions, any contributions, observations? Okay. All right, so let's run to public sector audit, which is section 2, public sector audits. We have similarities with public sector audits and that of commercial audits. And the principle of an independent audit under ISAs apply equally with that of public sector audits, even though we have IPSAS, but then ISAs are actually used principally as is used for commercial audit. So the focus also on audit risk, materiality, audit evidence in commercial audits is almost the same with that of the private or public sector audits. The key difference is that the nature of the entity. The public sector bodies serve citizens, not stakeholders. They serve the public. Now, the audit objective may go beyond just finances or financial accuracy, and the audit objective will include compliance with the laws of the land, the regulations promulgated by institutions in that country. Then the economy, effectiveness, efficiency of operations, talking about value for money audit, will be significantly what the public sector audit permeates around. Then the use of public funds for intended purpose is part of the objective. So those are the key differences between private and public sector audits. Then we have the institutions involved, speaking to the supreme audit institutions. Then we have the established constitution of the supreme law. And we have the independent government bodies mandated to audit public sector or public entities. These bodies, ESIs, institutional standards of supreme audit institutions, are those that govern auditing the public space. Then INTOSAI is the international organization that looks at different countries together, and they develop the international standards on the supreme audit of institutions are there. So the set principles for independence, professionalism, and the audit of these public interest entities have their bodies that govern them. And the quasi-autonomous non-governmental organizations also perform audits of public entities across some countries and borders. So they may not need to apply ISAs or ethical independence standards. They have their own standards that help to provide the guide and the framework on that. But auditors should, in our own kind of IFRS setting, should try to employ the IAS where necessary, even though these INTOSAIs, Quangos, and organizations may not. But we as IFRS compliance auditors should try to do that in the public space. Is very necessary. So for them, they do more of international standards on this supreme audit institutions kind of standard. They don't just use ISAs, and their standards are defined by prerequisites for functionings of these supreme audit institutions. But then the same thing, those standards emphasize independence, accountability, transparency, and professionalism. So it's like a replica of the ISAs, even though not prevalent or well known generally. So those that have written public sector, you're right to lie. You are yet. I think public sector should be in skills now, not in professional. So you should have written public sector. You will have seen most of the details of these public sector audits, and it can be very boring anyway. But then, if you want to have more detailed understanding, you can go back to B6 paper on public sector and accounting and finance to have the detailed review of it. But at this stage for AAA, I don't think it's necessary. So for exam pointers anyway, always state that the audit principles are the same for public and private sector audit, but the context and risk and also the objectives around what the public sector and the private sector are all about may differ significantly. So mentioning of the supreme audit institutions and the international standards for these supreme audit institutions, if it shows up, I've not seen a question like that. The core terms, the examiner looks for some of these terms and how to explain them broadly. Then you need to highlight the public accountability and the use of funds as a key focus, not just profit for the audit of private sector organizations. All right, so that's it for public sector audit, and that will be the end of this unit on the not-for-profit organizations audit. So in reviewing the chapter, we're done with audit planning. The chapter we covered, we spoke about audit engagement, planning, the components of audit risk, the model, looking at inherent control, detection risks. We've also looked at the principles and applications of materiality, talking about the judgment, quantitative, qualitative materiality. We also looked at the relevance of computers to auditing. And we also spoke to application of computer controls, and we also spoke to public sector audit, not-for-profit organizations audit, and we've rounded up chapter 7, hopefully, and I'm happy we've done that before we close so that we can move in the next class to our question and answer practice.